What does it all mean for the path of rate cuts moving forward? Joining us now with his outlook is former Federal Reserve Governor Randy Kroszner. It's always complicated for Fed Chair Powell as he has to, I feel, respond to what the market is doing. Don't you think?
Oh, it's very complicated because it's not exactly clear how long these issues will be causing tumult in the markets. Obviously, financial conditions are much less tight than they were not long ago. The jobs report still showed resilience in the underlying jobs market, and also is positive in the sense that there's a little bit less wage inflation. But gosh, they're dealing with a lot of storm clouds ahead.
But what about responding to what we got on tariffs and what happened to financial conditions as a result, what happened to recession odds and the outlook for the economy? What do you think he can say at this point about that without getting politically into tariff policy and without pre-committing because they don't know what's going to happen with inflation?
And so I think he's going to sort of step back and say pretty much along the lines of what they've been saying. We now, well, before they were saying we don't know what the policies are going to be, now have more clarity about those policies. But we're going to take time to analyze what the economic consequences are. Obviously, there's been a big move in the financial markets, but I don't think he's going to come out and say, "Oh, odds of recession are up, so we're going to be easing." I think he's going to say, just like he's been saying, wait and see. He doesn't want to make a commitment right now.
Randy, Barkin had a great phrase this week when he talked about a cage match between producers who feel they can push forward any price increase on inputs and consumers who are absolutely resistant. Do you have a net sense of who might win that debate or fight?
Well, it's interesting because sort of something else has been thrown into the ring, which are the tariffs, and so that clearly will be an increase in costs for anyone doing the imports. And one of the key questions will be: will consumers pivot to other things that don't have the imported content, and so can kind of avoid some of those price increases, or not? That's really going to be where the main fight is going to be.
I've been wondering whether the Fed should be gearing up to cut maybe sooner than expected, because by the time it waits for the data, especially the unemployment rate, which can be a lagging indicator, it might be too late.
Well, they've been talking about that for a while, that they would be willing to cut before they see a recession, as long as they see inflation moving along the path to 2%.
But we know that's not going to happen, Randy, right, with the tariffs. But can't they look through that?
Oh, sure, they can easily look through that. But you've got different views around the table. You have some views, like my former colleague Austin Goolsbee, who says, hold on a second, this is not just a one-off thing. This is going to lead to retaliation like we saw with China, and then others are going to retaliate, and so this is an ongoing thing. I think people like Chris Waller will say, this is just a one-off thing, so we're going to look through this and focus on the real economy. I think the debate is quite live around that table.
So ultimately, what do you think they're going to end up doing this year? How do you think the tariffs are going to impact the persistence of inflation and the economy?
So I think it is a one-time move up, but I don't think it's going to cause persistence. That said, it makes it more difficult for the Fed to assess, well, are we really moving down to our 2% target, or is it just the tariffs? But I think the uncertainty that we're seeing is leading to a lot of challenges for the economy. It's creating headwinds. I mean, unless we see a really rapid move forward on the deregulatory agenda and the tax cut agenda that could help to try to offset some of this uncertainty, I think we're going to see a substantial slowing, and then that'll lead the Fed to cut more. I mean, the markets are pricing probably another 50 basis points of cuts than they were a few days ago, and at least another 25 seems to be sensible to me.